Yo, what's going on, guys? Welcome back to the channel, man. Today's video, man, it's gonna be probably a longer one, but it's another video on the system and how I trade it. So, if you guys don't know the system, it's probably one of the best ways to trade, honestly, out there. It's way better than ICT, in my opinion. It tells you when the market's neutral, bullish, or bearish. So, you want to capitalize when the market's bullish or bearish when we're in a strong trend. When the market's neutral, that's when you want to be taking less trades with less size, or just trades with less size pretty much, and then just, once you're green, call it a day, and then just wait until we get those trending days. That's when you want to size up and be watching the charts a lot. So before we even get to the video, once again, this is not my strategy. This is from Colton Options on Twitter. Beautiful strategy, man. Since he posted about it, I followed it and just saw really good success with it. I've been profitable with it for ever since I was using it. So yeah, you just gotta be disciplined, have good sizing. You don't size too heavy, don't be an idiot. Take your gains when you're up like 5-10 points, stop loss break even on runners and stuff like that. So yeah, beautiful strategy. Doesn't get better than this. If you guys didn't watch the last video, make sure you guys watch it. But pretty much we'll go over everything that I use. So to start off, we're just gonna start off simple. So if you guys didn't watch the last video, what's it called? You're picking a 0DT contract for both puts and calls. So you're gonna have two 0DT contracts and then two contracts for Friday expiration. So the 0DT charts gauge like the intraday trend and stuff like that, and the 0DT charts are the ones where you take trades every day based off of those. And then the Friday contracts are like larger time frame, what the current trend of the market's in, bigger picture. So yeah, that's pretty much what the 0DTs are, and then the Friday contracts are. The Friday contracts, you're able to swing trade with those. Once we flip bullish or bearish, that's what the tone will be for a little bit, and you could get a good move out of it. So how do you determine when we flip bullish or bearish on the 0-day contracts or the Friday contracts? Well, what you need to do, get Thinkorswim. It's an app. It's what you see on the screen right now. You'll see these charts. You got to add an option contract chart to your watch list, and then add the 10 and 50 simple moving average, 10 or 50 SMA. The 50 SMA is the blue line. The 10 SMA is the green line. And these are very important when doing this. And also make sure the extended hours are turned off. You don't want those on when trading the system. So yeah. So first off, the 0-day, we're going to go over how to do the 0DT trades. So without knowing anything else about the Friday contracts, this is how you trade the 0DT. So first off, what you see on the screen right here is an example of a cross. So this is when a trade will happen. So when the 10 SMA crosses above the 50 SMA, which happened right here, and you got a nice move out of it, that's when you flip long. So since these are call contracts, the 440 calls, they crossed bullish, and there's also crossing negative as well, but we'll get into that later down the line in the video. But yeah, we crossed bullish on these contracts, so you're able to long until if we lose the 50 SMA. So if we close below the 50 SMA, which is a blue line, that's your stop loss on the trade. Also, if you get in quite a bit away from the 50 SMA, you could also use a tighter stop loss if you want. But trade is valid as long as we're above the 50 SMA. Also, another thing you need to look at is how the 10 SMA is looking, or no, the 50 SMA, my bad, is looking on the cross. So if it's pointing down, if the 50 SMA is pointing down and it's not curling or flat like how it is right now, it's starting to get that curl to it, that's when you want to take the trade. If it's pointing down, you don't take the trade. You have to wait for it to curl or flatten before taking it. If it's pointing straight down after a cross, you don't take the trade. There's no trade to be taken. You just wait. That's all you do. You wait until it curls or flattens out. And yeah, that's pretty much how to do the 0DT real quick. So right here is another example of just a normal chart. This isn't a cross right here. This is no trade to be happening. These are the 439 calls right here for 0DTs, and this is what it looks like when a cross doesn't happen. So right here, the 10 SMA is moving on up towards that 50. Obviously, when you're looking for a trade, you're looking for this to cross above the 50 SMA. You want this green, cross above the 50 SMA, which is the blue. And right here, we rejected the 50 and saw some downsides. So this is another way you could play the 0-day contract. So since these are calls, you could short the 50 SMA if it's pointing down hard, which it was right here. When the markets are neutral, obviously your risk would be if we cross, or you can use like if we break above the 50 SMA if you want like a tighter stop. So yeah, that's just another way of doing it. You could play like the opposite of what the contracts are if we're at that 50 SMA for 0 DTEs. It just kind of depends on the context of the market, pretty much. So if the market's neutral, which means there's no cross on the Friday day contracts, then you just play the normal intraday crosses. And then also if the 50 SMA is pointing down hard, you could take a short position based off of what like the contracts are. Since these are calls, you take a short. If these were puts, you could take a long off of that 50 SMA right there. Once price taps that 50, your stop loss could be a break above or a cross on those contracts. So there's just a bunch of things you need to like know about the system, because it mainly depends on the context of the market, what the Friday contracts are, and then from there you could go and make like a trade based off of where we're at. Like on the 0 DTs, but don't think I said this yet, but which I should have. That's why I want you to watch the other video. But 0 DT contracts, you watch the 5-day, 5-minute time frame only. That's it. The only time you go above the 5-day, 5-minute is when we're trending and we're getting overbought on the 0 DT contracts. But once again, I'm gonna go into that later because that's more like in depth into the system. It's a bit like it probably gets confusing. It could be confusing right now for you, but I'm just trying to like save the harder stuff for later. So right here is an example of the Friday contracts. This is what they look like. These are the 435 puts. It's always going to be in $5 increments. So when choosing the strike price, like of what contracts to watch, if you didn't watch the last video, I'll go over it right now. So 0 DT contracts, how to pick the like contracts every day, the 0-day expiration. So it depends where we open. So if we open above like 440.5, then you round that to 441. Okay, and if we open below, let's just say 440.5, then you round it down. Obviously, like that's how rounding works. You know, if we open below the 50, you know, you round down. If you're above the 50, you know, round up. So that's like the like base you'll use, and then from there you add or subtract 1 to get the calls and puts. So if we open above 440.5, so say we open at 440.55, you round that up to 441, and then you add 1 for calls, so 442, and then subtract 1 for puts, so that'd be 440. So you run the 442 and the 440 puts for your 2 contracts, the calls and the puts for 0 DT. So that's how you do that. Friday contracts, a little different, different like rounding. Instead of rounding to the nearest like dollar, you round to the nearest like fifth dollar. So if we open, let's say these are the 435. So if we open below 432.5, then you round that down to 430, and that's your base. And then if we open above 432.5, then you round that up to 435. So say we open 432.30, you round that down to 430, and then you add 5 for the calls, subtract 5 for the puts. I was trying to get that 435, but then realized the rounding thing. But you kind of get the point. So in this case, the base was 440, so we'd have to open above 437.5 or below 442.5 to get that round at 435, since you subtract 5 for the put. So the base was 440, if you get what I'm saying here. So if we open at, let's say, 443.5, you round that up to 445, then your base is that 445, and then subtract 5 for puts, 440, add 5 for the calls, which is 450. So that's how you get the Friday contracts and the 0 DTs. It's just rounding to the nearest dollar for the 0 DTs, and then rounding to the nearest 5 on the Friday contracts. So in the picture you see right now, the market is currently neutral. Nothing is crossed, which this is about to cross. This looks like a very nice like short about to cross. So one reason that 50 SMA is like completely flat, so it makes the cross easier to happen. Once this crosses, you'll see a big dump pretty much. So yeah, when the 10 SMA is like curling up super hard, that is very like bullish on the contracts pretty much. So like before cross, sometimes I get in before we cross. That could be like dangerous sometimes. Just know your risk when you're taking trades. But when that 10 SMA is like curling up super hard and it's like pretty much bound to cross, sometimes I do take those. It just depends like how close that like 10 SMA is to like the 50 and how hard it's curling up. But right now in that picture you see Friday contracts, you always look at the 30-minute time frame, 15-day, 30-minute time frame, and you obviously are watching for the cross, just like 0 DTs. In this case, it hasn't crossed yet, so yeah, hopefully there's a picture showing the cross. If there's not, I'll eventually show you guys one. So right here, this just still looks very nice. I would personally probably take this later size until we cross, because look at 10 SMA curling apart, and then next 30 minutes bound to cross. If it doesn't cross on the next 30 minutes, then I'd probably exit or not take the trade. All right, so I couldn't find a picture of the other contracts, but right here is an example of a Friday contract cross. So in this case, the market flipped bullish, and you could swing trade longs. So you could swing longs to the next day right here. Obviously, if there's a big move that happens between the time you enter and before close, obviously you scale. Don't be like stupid. Like, you know, take some off, leave some runners and stuff like that. But yeah, so the 10 SMA right here crossed above the 50, and the 50 SMA is starting to curl. So initially, that 50 SMA was probably pointing down, and then eventually right here, or not eventually, but it started to flatten, and then as you can see, it's starting to curl up now. It's starting to make that like that V shape. So in that case, this is a valid trade to swing long positions. And so when this happens, you have to, there's different things you do when the market is bullish, like trending, I'll just say, for like bullish and bearish, and then neutral. So this depends on like the 0 DT contracts, how you trade them. So when the market is bullish, let's say, like in this case, the 10 crossed above the 50 on the Friday 445 call contracts. So when taking a 0 DT trade, you want to focus on the call side for that day. Like, don't take the put cross if it does cross. Just be patient, because the overall like sentiment is bullish, and that's what the current like market is. It's bullish. So what you do, you just watch the calls until the 10 crosses above the 50 on the 0 DT calls, and then say you enter, okay? Say you enter, get a nice move, scale out, get stopped on runners, okay? So where's the next trade from there? The next trade from there is the 50 SMA, which is the blue line. And you could buy the dip at the 50 SMA on those contracts if that 10 SMA isn't pointing down like hard. I'll try and find an example. Hopefully I have one in here. But yeah, when the market is trending, you could buy the 50 SMA on 0 DT contracts after the cross. When the market is neutral, so when there's no cross on the Friday contracts yet, you can't do that. So the 0 DT cross, when market is neutral, you just take the initial cross, and then have stop loss at break even on runners. And then if price gets back down to 50 SMA, you don't buy that. Like, you don't buy the contracts at the 50 SMA when market is neutral. That's something important you gotta know. So the next so where's the next trade from there after like you get stopped on runners and looking for another trade? Well, if we reclaim the 10 SMA on the 0 DT contracts, that's your next entry point. So candle close above the 10 SMA, it looks something like right here. So I know these are the Friday contracts, but a candle close above the 10 SMA would be just a closure above the green line. That's it. It has to be the body has to close above the 10 SMA. So those are like the rules kind of for like trading the 0 DT contracts, whether the market's bullish or bearish. I'll try and find some examples. I'll definitely have some. I'll just have to like look for them. And as you can see right here, this is an example of a 5-minute cross. I'm pretty sure this was towards the end of the day right here, but yeah, this example right here. So 10 SMA, green line crosses above the 50 SMA, blue line, 0 DT contracts. This is when the market, I'm pretty sure, yeah, this is after the fact that the 445 calls crossed. So the market's bullish, you take the cross and then look at, boom, nice move up. If you entered on the cross, you're probably up at least 100% right here. So very nice move. I personally trade futures mainly. Sometimes I take the option contracts, but I just prefer trading futures. It just moves easier. There's no like theta, there's no theta decay or anything like that. So that's why I do that. So this is what it looked like. The 445 calls crossed, which I showed you guys earlier, and look at the move that happened. Market flipped bullish, and look at the move. Freaking, what is this, like a $0.8, $1 to 3.4? Obviously you scale on the way, and then once like we start seeing some pullbacks and stuff like that, your main pullback to add is that 50 SMA. Once the 0 DT, or not the 0 DT, the Friday contracts cross, your like risk is the 50 SMA. We lose the 50 SMA, you stop out, and that's it. And then your next like opportunity on those contracts, or like swing longs, is when we get back to the 50 SMA. Once the price candles come back to that blue line and tap it, that's when you can buy again. Risk is the 50 SMA. You just have to take into consideration how that 10 SMA is looking. So what do I mean by that? Well, as you can see, that 10 SMA is going straight up, and then right now it's pointing straight down, like straight down pretty much. If it's looking like this, right at that blue line, if the blue line, let's say, was right here, like right where price is, I would not buy that dip, just because that 10 SMA pointing straight down on contracts is bearish on those contracts if we're crossed. So pointing down, straight down, not good for the contracts pretty much. So you just gotta like be patient. Sometimes you won't get trades, sometimes not many trades throughout the day. But yeah, once again, we crossed, got a nice move up. Market is still bullish right now, so but you're just mainly watching for that 50 SMA area for like another swing trade pretty much. And then your stop loss, close below the 50 SMA, and then you wait for it to cross again, or we end up like the market goes back to neutral. So the market would go back to neutral when the 10 SMA here crosses below the 50 SMA. That's when there's no longer that current trend that was happening. Yeah, this is 0DTs. This is kind of an example of a cross that didn't play out too much. As you can see right here, we ended up crossing and then not much upside from there. And right here, as you can see, 10 SMA pointing down super hard. If I had to guess, I didn't even look at the next chart. I could pretty much almost guarantee you that this is going to end up crossing down. But I could be wrong. I still could be wrong. But yeah. So realistically here, if the market is still bullish like it was, you could buy that 50 SMA. You get a nice little bounce here, 0.35 to like this went up to like 45 to 50. So yeah, once you play that bounce off the 50 SMA, your first target is that 10 SMA. Sometimes not big moves will happen, and you just gotta be able to cut losers and stuff like that. But if I had to guess, this thing's gonna cross down. And yeah, right here it pretty much saved the day, I think, on these contracts. And I did get stopped out of this trade because I did buy that 50 SMA dip. Candle close below the 50, you hop out, and then once we like reclaim the 50 SMA, you could re-enter on the 0DTs if market is trending and whatnot. And then stop is like obviously a close below the 50 SMA. And right here, they did actually end up crossing down right here. And then you saw a downward move. Obviously, market, I'm pretty sure, is still bullish in this case. So we're watching that curl up and cross again, which I feel like this is going to happen. And then right here, we end up crossing. And let's see if we could get a move to the upside. Yep, look at this move that just happened. We crossed. Your risk is that 50 SMA. We hold that 50 SMA. You're good to stay in the trade, which we did. 0.35 to like 0.50 right there. So super nice move. As you can see, the system works great, man. System is one of the best out there for sure, if not the best. And then look at it. So I'm pretty sure it's a zoomed in example of it, but we crossed. We ended up pulling back to that 10, 50 SMA area. Your risk is that 50, and we never closed below and got a nice rippy off of that. And then here, another example of a cross. We ended up crossing for 0DTEs right here. 10 crossed above the 50 SMA, green crossed above the blue. Same case scenario here. I think was this the same trade? Not sure. But we ended up crossing, pulling back to that area, getting a rippy, and then look at these things. 138 a piece from 0.35. That's like, what is that? I don't even know. Like a 5x almost? Like a 4x? Yeah, like a 4x around there. So that's just crazy. Like crosses can net serious moves when market's trending, that's for sure. All right, so here's an example of a bounce off of the 50 SMA. So market's still trending, I'm pretty sure we're still bullish. So in this case, this was that cross earlier, or there was a cross earlier. And look at, okay, this is actually like two examples. So we ended up crossing right here, dip down to that 50 SMA, rip. Market's trending, so you could buy that 50 SMA on the contracts. And your stop loss is a candle close below the 50 SMA. It would have worked right there. Another dip would have worked right there, right off the 50, and a nice move up for over 100% easy. And then right here, another dip to the 50 SMA, and look what happens. Immediate bounce of like 50%. Crazy moves. And then in this case right here, we ended up bouncing like 50% off of there, and look at that move. That's over 100% right there. And then right here, that 10 SMA was pointing down so hard, and we did cross down on there. So if you did take that, I'm not sure what the 10 SMA was looking like on like this candle, since like it's many candles past it. So kind of just depends what the 10 SMA is looking like. If it's pointing straight down, I would not buy the 50 SMA dip, which that was probably the case right here because we ended up crossing down. And then also this is kind of when like there's choppy action, but we ended up crossing and big move happened as soon as we crossed. So contracts pulled back to that 10-50 SMA. We closed below, you'd get stopped out, and then we reclaimed it, so you could re-enter, which you would have gotten around like 0.25, and then look at 100% just like that. Yeah, it doesn't get much easier than that. You will get stopped out. You will lose trades trading the system, but you just got to be able to cut losers and just follow the rules. Follow like how the system's supposed to be traded. Don't go make up new ways on how to trade it, because it works perfectly fine just the way it is. All right, so these are call contracts for the 455s. I'm not sure why this is the 5-day right there. Probably didn't even notice that, but in this case, that 10 SMA is pointing down hard. You wouldn't buy that 50 SMA dip, since the 10 SMA pointing straight down. Would not buy that 50 SMA. 10 SMA pointing straight down, no bueno. Okay, if the 50 SMA was like flat, or if the 10 SMA was flat, then yeah, you could buy that, but it's not. It's pointing straight down, and right here it looks like a negative cross is about to happen. So a negative cross is when the 10 crosses back below the 50 SMA. When this happens on Friday contracts, usually there's a big move in the opposite side of the premium. So since these are calls and it crosses down, there'd be a big side, like big upside move in the puts. Usually that's usually what happens. So that puts the market back in a neutral state, and then obviously we'd see a move in the opposite direction. So 10 crosses below the 50, which didn't happen yet, but I'm gonna see if it does happen down here. Not sure. I don't think I might see a picture later, but we'll just move on to this. So this is an example of a cross not to take. So look what happens. We cross 10 SMA, cross above the 50. Yeah, good, but look at the 50 SMA. It's pointing straight down, no curl, no flatten. So that's a time where you don't take the trade. Don't take it. Do not take the trade. You have to wait for it to curl or flatten out. I said this in the Discord. If 50 SMA starts to curl, it can try again, or can try the trade. So look, we crossed, no trade yet. The 50 is still flat, or it's still pointing down. Don't think those ended up crossing. They might have, because if I look at this, market crossed. See, this is an example of a time where it just didn't like happen. So there's no like opposite side spike in the premium much, because we crossed down and then look at, we curled up and crossed again, I think by close. So yeah, we ended up crossing, and you could have swung overnight here with those 455 calls. Usually there's a big move on the opposite side. Not always, nothing's certain in the market, so you just got to be aware of that. Never like goes super heavy size. And I did say I was swinging some, and look at, we ended up crossing earlier like I said, and then look at the move we got, $1 a piece at the next open. So Friday contracts, very important to know where we're at. And then look at, so these are the 0DT contracts. Market is trending. What happens? We crossed on the 0DTs, an absolute moonshot. And what do I say when the market's trending? You can buy the 50 SMA on the 0DT contracts. Look at the 50 SMA right here, that blue line, beautiful. Beautiful bounce off of it and a ripper. And it was valid to take, because look at the 10 SMA. It's pointing pretty much straight up. So you're good to buy that dip. And look at the move you get. Over 100%. Like well over 100%, probably 150%, and just crazy moves. And then it's probably the Friday contracts, no, but another dip to the 50 pretty much right there. Not exactly, it won't always exactly tap it. If it doesn't, oh well, you scale into the trade and then stop below the 50. And then your first target's that 10 SMA, and then can move stop loss to break even to see if we break higher. And then look at the Friday contracts. Remember the contracts from earlier? Yeah, look at, we crossed again at like 0.7, 0.8, and then they're at 150 a piece. Market flip bullish. You could buy dips. So yeah. And then look at another, still the same trade. 160, 165. They're mooning contracts at going through the roof. And then look at this thing, bro. 230 a piece from 0.80 or 0.70 from when they crossed. You see like what I mean? The system, there's nothing that compares to the system, man. Crossed, 10 crossed above the 50, and then absolute moonshot. We rode the 10 SMA. That's what I like to do though. On runners, when we cross, I like to have the 10 SMA as my like trailing stop. Once we lose that, typically I'll like exit most of the position. I'm not sure the current context of the market, but in this case, if the market went back to neutral, these puts crossed, valid trade right here, 10 crossed above the 50. But if market's bullish, I wouldn't take this trade, just because that's not what the bigger like time frames are like showing, or direction showing. So these 453 puts, as you can see, zero day trade right here, 0 day expiration, 10 cross above the 50 right here. This is when it happened. And then look at 0.50, 0.60 around there, and then look at, we pulled back, stop loss is that 10 SMA, and then boom, 150 a piece. Where did these go? Like 2x? like 100%, just like that, 150%. Just crazy how the system works, man. All right, so in this case, this would actually be a solid short, I feel like. These 455 calls, 10 SMA pointing down, or 50 SMA pointing down really hard, but that 10 is curling pretty hard. I'd probably just rock a stop loss with the close over that 50 SMA. But yeah, 10 SMA pointing, or 50. Why do I keep messing them up? But the 50 SMA is pointing down super hard on 0 DTs, and the market is neutral, I think, at this point. So you could take a short here with like a stop loss above the 50, but let's see what happens. Yeah, so that move up right here would have been a nice opportunity to short, because look at the move we got back down right here, and they're about to cross on this like reject. That'd be a nice like little like short trade you could have taken. And as you can see, we're still not getting above and getting across on these contracts. We'll have to see what happens here. And then look at, we finally ended up crossing on these puts, and then look at, we end up crossing, and we get a pullback. 10 SMAs pointing up, 50 SMAs flat, so trade is valid, and we'll have to see what happens. And boom, look at this thing, 100% return right there if you got dip ads around like 0.50, 0.40. So 453 put cross is 10 cross above the 50 market. I'm not sure what the current like context of the market is. I'm just assuming it's neutral right now, because like we're not playing calls. So that's just what I'm thinking. All right, so another example of a trade you don't take. That 10 SMA, look at 10 cross above the 50, but guess what? The 50 SMA right here pointing straight down. There's no curl, no flatten. So you don't take the trade. We'll have to see what happens. And then look at, boom, we dumped. So that's why you gotta like make sure you follow the system, because if you just take a trade when the 10 crosses the 50 and don't look at anything else, you're not gonna do well. Just so you know, you gotta make sure you look at the Friday contracts, look at how the 50 SMA is. It has to be flattened or like pointing up. And then look at, we ended up crossing right here. Look at the choppy action. 50 SMA has been pointing down this whole time, and it finally flattens and crosses again, and that's when we see an upside move. And look what happened. We crossed 0.75 to like 115 almost. So really nice move. And like I'm just it doesn't get much easier than this, man. Just follow the system, you will do well. And then there's more that I want to get into. Hopefully you guys are like understanding it. There's different ways to play and look at the higher time frames, which we'll go into. But yeah, we're just gonna focus on these crosses. So right here, these 455 calls, 0 DT, 5 minute, 5 day time frame. We're watching for the cross. This looks really good for a cross, because 10 SMA starting to curl up, and it looks like, and that 50 SMA is also flat. So we curl up and cross. Very nice like trade to take. And look at this thing curling up super hard. I'd imagine this crosses here. I'm not sure. I guess we didn't end up crossing right here, so we ended up rejecting off of there. That 50 SMA looks like it's pointing down now. In this picture it wasn't. I don't know if we rejected or what, but yeah, I guess we didn't cross on that. All right, so another example of a 0 day cross. 10 SMA cross above the 50. 50 is flat. Valid trade to take. And look at the move we get. Stop loss is close below that 50 SMA. And we get a nice move, what, 145 a piece. Even on this initial cross, you probably got in around like 0.95 to what, like 115. Nice move. You're still good to trade. Runners, you probably would have got stopped on if you had that 10 SMA risk right there, but we reclaimed it. So yeah, this is another opportunity here. If market's neutral right now, you could play once we close back over the 10 SMA, which was on this candle right here. So 115 to 145 again, another trade. And then right here, example of a cross on the Friday contracts that I wouldn't take yet, because the 50 SMA is pointing straight down right now. So we have to see this thing, the what's it called, the curl, like the 50 SMA start to curl or flatten out. So right here we crossed, no curl yet, so no trade. Still pointing down, so no trade. We did get a nice upside move, but you have to follow the rules. Don't just like, yes, yeah, it could work out, but like that's not part of the system. Like it's not gonna work out like most of the time. Like more success if you wait for that like curl and cross, or the curl and flatten before like entering. And as you can see, we ended up getting a big dip here. I think this does cross eventually, but we'll have to see. But still no trade yet, no flattening out of the 50 SMA. And then look what happened on these contracts. We ended up just dumping. So that is why you have to be aware of how the 50 SMA is looking. But we ended up getting a big move up in here. I wonder if these cross again. And then look what happened. Rejected 50 SMA, no cross. And another case right here, the 0 DT puts right here. The 50 SMA pointing down super hard. This thing's going straight down. So you could long that area right there if market, and then you would have got a nice little move from that 50 SMA, and then you could target that 10 SMA for a target. And then look at, we're curling up super hard. I'm not sure if these crossed or not, but we'll have to see. Obviously, if this crossed right now, no trade. 50 SMA not curling or flattening out. And then yes, we crossed, but no trade. The 50 SMA is still like pointing down. And yeah, it did end up finally curling, which is good. Obviously, if you take in the cross, it would have worked out, but you have to just follow the rules, man. It'll make it much easier and better. Yeah, maybe you'll miss out on a move or two, but it's making sure that you have the highest probability of winning. And then look at the move of this. If you had runners on this thing, man, holy gosh. I'm pretty sure I'm not sure. There was a trade that I caught for a couple 100%, just trailing the 10 SMA. So that's why it's good to have a trailing stop loss of the 10 SMA, because this can happen right here. If you entered at like $1, these are up like 5x. This is also another good opportunity to short, because these 457 0DT calls are at the 50 SMA here. The 50 SMA is pointing straight down. So in this case, most likely it won't cross. Your risk could just be a candle closure above that 50 SMA for a tight risk. But yeah, you would have gotten a nice little pullback out of that for a trade. And we finally ended up crossing on these. Look at the pullback though you got from that 50 SMA. If you had that 50 SMA on for a short, look at, you got a nice move out of it for a few points, probably like 5 points or something. But and then we finally ended up crossing here. We look at the 50 SMA is starting to curl, starting to flatten out a bit right here. And then look at the move we get. What was that? 110 a piece. So yeah, nice trade again. I'm not sure like what your entry would have been when this started to flatten, but yeah. All right, so this is a trade I took. So the 455, another 0DT trade right here. We crossed right here. That 50 SMA did flatten right here. So I did take this kind of risky trade here. Obviously, if this ended up dumping, I would have stopped out. But that 50 SMA flat, it went flat right here. So I took some. And then look at the move we got. 0.70 from what? 0.30, 0.40? Like, that's just a crazy move we got. All right, so something else I want to go over. When you're trading the 0-day contracts, all right? Or not, yeah, the 0-day contracts. So first off, if you look at the Friday contracts and we're at the 50 SMA on the call contracts, let's say we're not crossed yet, but we're at the 50 SMA. So like right here, right at the 50 SMA, and let's say 0DTs cross. I would not take the 0DT cross, because that 50 SMA strong resistance area, and obviously as you can see we ended up dumping hard from that. So a 0DT cross is not valid if the 50 SMA is not flattened or curling up, or we are at the 50 SMA on like the Friday contracts, like we're under the 50 SMA and we're like tapping into it. So just so you know that. All right, so example of a cross that you would get screwed on if you don't follow the rules. So we cross 10 across above the 50 SMA though, pointing straight down. What happens? We cross and then we dump. So you got to be aware of that 50 SMA. And look at the dump that happened, or on the contracts at least, because these are puts. So we ended up like mooning. Again, another example of a trade you don't take. Right here we cross, 50 SMA pointing down, and we dump. So no trade there. All right, another move here. We ended up gapping up here, and like usually I don't like taking like gap up crosses, but ended up playing out in this fact here. As you can see, we crossed, little pullback to like 0.40, and then ripped over like 100%. But just the power of the system. And look at these things. The 450 puts for Friday expiration, we crossed and ended up getting a massive move on these. All right, and then I entered on this as well. We crossed on the puts, and since the market's bearish, we ended up just absolutely dumping from that entry point. And then look at, we ended up crossing and 215 already a piece. Like, it just doesn't get much easier than that. Look at these things, 230, 250 from the cross, 0DT, man. It's just crazy. And look at 260 again. I got a 165 entry, and it's at 260. And this is what the Friday contracts looks like. Look, I've told you. We crossed, and we got a big move up. Why? Because the Friday contracts gauge bigger trends. So once we cross on the Fridays, that determines like what state the market's in. So in this case, the market flipped bearish once we crossed. And then these puts and next day ended up opening up crossed, and then bought the pullback on these. So like the 10 SMA. And then look at, boom, 0.95. They ended up going over $1 a piece right there from that like dip ad. But right here, you could buy the 50 SMA. So this is a perfect example of a good buy at the 50 SMA. 50 SMA flat, 10 SMA like flat too. It's not pointing down. If this thing was pointing down hard, no trade. And look at the move you got. 0.50 to, like I said, first target that 10 SMA right there, and then stop at break even. Let the runners go if it wants to break above. So like 0.65 from 50, and if you got ads below here too, you're up like 30%. All right, so another example of just the cross on the Friday contracts right here. I said I had a small portion swinging the next day. As you can see, the contracts crossed right here at like what 0.8, rode it up here. we pulled back to the 10 SMA and we just ended up gapping down, and these 450 puts opened up at like $3 a contract. So yeah, so like when we do get a big move and it's going into the next day, yeah, I'll swing like a small portion of like the position in the next day for a chance to continue higher on the contracts. But if big moves happen like intraday, just make sure you're out of most of your position, because you don't want to get back those gains or anything like that. Especially don't bag hold and let a trade go red, especially when you're up like a decent amount, like percentage wise. All right, and then right here, since the market is bearish, as you can see, these opened up crossed, and I said I took these on a pullback right here to that like 10 SMA, and look at the move, boom, 95 a piece. And then since the market is bearish, you're able to buy that 50 SMA dip on the contracts. When the market is neutral, you can't do that. You have to wait for a candle closure back above the 10 to take the 0 DT contracts again. So these were about like 0.50, 0.45, and then look at the bounce to the 10 SMA, 0.65. I'm not sure. Did I go over this already? I might have, because I'm recording this part of the video like after the last part, like a different day. So not sure exactly where I left off, but and then here you go again, 0.75 on the contracts, and then let's see if we get anything else here. Yeah, 0.85 from that 50 SMA, 0.95 after we broke above the 10 SMA. We ended up like rocketing. Your stop loss would have never got hit on here because 50 SMA is your risk. And then once again, we ended up pulling back to that 50 SMA. You could have added here. Stop loss never gets hit. 0.50, 0.95. Or actually, no, that's not the screenshot. I'm looking for a different one right here. So you could have tapped it right below. Like that's like 0.52, and then all the way up to 0.65, just like that. And see if we get 0.70 now. And then see what else happens. All right. So now, hopefully, you guys understand like the crosses and stuff like that. And then right now, so the more like in-depth way of like the system, and like if you want to dive deeper into it and get overbought on the contracts, this is probably a little bit, could be a little confusing to understand. So what you do, remember, like I said earlier, on the 0 DT contracts, you stay on the 5-minute only, but there's only one time where you don't, and that is when the market gets overbought on the contracts. So not like SPY is overbought, the contracts get overbought. So since these are the 447 puts, these are getting overbought, so that means the market could see a bounce. So how do you get it? So you have to find where the 50 SMA is on these contracts. So you look at the 15-day, 30-minute time frame, and to get the overbought on the contracts, you have to find where the 50 SMA is. You could do that by just holding down on the like most recent candle, and then in the bottom left it'll tell you where it's at. So right here it is about like 0.30 or like 0.27 probably. So you have to multiply that by 4 and then by 5, and that will get you the overbought levels. You can't see the second overbought level, but first one is around $1, and then that is exactly where we rejected from. And in this case, you could buy calls or go long on the S&P. Once we reach those overbought levels, market pretty much always ends up pulling back from these levels. Very, very high chance it will. Once we get overbought, it's really good trade to take. And yeah, you multiply that by the premium of where the 50 SMA is by 4, and then by 5 to get like a zone, and then that zone will be the overbought level. And this is what it looked like on the 5-minute. Once we came up to that level, we ended up getting a big pullback, and then look at, you could have taken the trade right at the 50 again for another bounce. So once again, 0.50 actually no, I think that was the same trade right that we took after. Never mind, scratch that. All right, so right here is an example of when I wouldn't buy the 50 SMA. So these are for the Friday contracts, 445 puts, and we ended up pulling back to 50 SMA. But look how the 10 SMA is looking. It's pretty much pointing straight down, which leads me to believe that this is going to end up crossing down, and we'll see some upside on the S&P since these are puts, and we'll see what happens. Yeah, look at it so far. It looks like we're going to get a negative cross. Longs are probably paying right there. And as you see, we're going to get that cross down because this is bound to cross in the next candle close. Longs would have paid right there if you took long, since the 10 SMA was pointing straight down. That was a valid trade you could have taken. And then right here, example of a 5-minute cross right here, 452 calls. Market, I'm pretty sure, is neutral at this point. So 10 across above the 50, and yeah, look at these things, over probably like 50% so far on those contracts. And then right here, once again, it's the same chart, but just higher on the contracts. 102 a piece from like 0.60. 108 is really nice move from these, 77% I said on those. And then I said I was all out of these calls once we lost the 10 SMA. Like I said, I like using the 10 SMA as like a trailing stop on runners. So once we close below the 10 SMA, you just exit, or if you're like break even, stop loss gets hit first, whatever one happens first. And then right here, crazy move on these 450 puts right here, man. These things went like 4x. Look at these things. We end up crossing right here. And then what are these, like 0.60, 0.50, around like $40 to $60 contract. And look at these things, 160 a piece. Just crazy move on these contracts. There's just nothing that compares to this system. And look at these contracts, 220 a piece, man, from 0.4. These things just ended up going crazy. And another example right here, I said I was scaling into these because 10 SMA is pointing straight up. It was bound to cross up, and we ended up getting like 30% on these. So another really good move. And then I do want to get into here we go, another, what is this, 237 a piece. So another thing I want to get into is how to play like the higher time frames. I'm not sure how many pictures I have of these, but I will try and find them. All right, so right here is an example of using like higher time frames. So this is the 90-day, or it's not, yeah, the 90-day 4-hour. I think it's supposed to be on 180-day 4-hour, but as you can see, these are about to cross down. So larger time frame. Since these are puts, it looks like we're going to see some upside. I'm pretty sure that's exactly what happened here. And I said going into Friday, the 4-hour chart gave a signal to buy dips, plus about to cross down on the 4-hour, plus that 10 SMA is pointing down pretty hard. And then, as you can see, the 455 calls end up getting a massive spike here. And then on the call contracts, we're at that 4-hour 50 SMA, so you can short this. The 4-hour 50 SMA is mainly where the trend ends. So once we get there, you could take a short, or you could expect whatever premium you're watching to reject from that 50 SMA. So yeah, I just don't have too many screenshots of like the higher time frames, I don't think. But another example right here, the 1-hour time frame crossing down calls, so you can expect downside once we have like that 10 SMA pointing down super hard. And this is what it looked like right here. So this is on the 30-minute time frame for the 460 calls, 10 SMA pointing down straight down, and this was going to cross down. And I said, so today we're watching the Friday contracts because with how hard the 10 SMA is pointing down, it was looking like a negative cross is going to happen. So since calls are about to cross down higher time frames, we went short, which netted us 20 plus points. So this is the same contract, just on the hourly, and these things went 0.30 to 1.3. So as you can see, there was a big drop that happened on the S&P since those are calls. And right here, an example of 452 puts, 0 DT cross, 10 cross above the 50, and a nice move. You would have gone probably like 50% or something like that. More than that, maybe. All right, another example of like the negative cross with the 10 SMA pointing straight down. So as you can see right here, that 10 SMA is literally going straight down. Like there is no like curl to it whatsoever. So I would not buy that 50 SMA right here. This thing is going to cross down. Like I could put probably my life on the line on that's going to happen. And then see if I get an updated screenshot. Yeah, right here. Look, we ended up crossing down. And yeah, I mean, it's pretty easy. Once you get the hang of it, looking at like higher time frames, I use the 30-minute, which obviously you're supposed to anyway with the system. 1 hour, 2 hour, 4 hour. So yeah, you just want to make sure to always check like the higher time frames to see where we're at and whatnot, and to look for like those negative crosses and then the like normal crosses as well. Negative crosses is just when the 10 goes back below the 50 SMA, and also when looking at the 10 SMA, you got to see like how it's pointed. Is it like level? Is it pointing up, or is it pointing down? If it's pointing down and we're already crossed, that's pretty bearish on the contracts. If it's pointing up and we're not crossed, that's like bullish on the contracts. But just wait for the crosses to happen. Or if we're just pointing down like really hard, like, and we're near the 50 SMA, most likely that'll lead to like a negative cross. So just make sure you're watching those higher time frames. And yeah, here's just another 0 DT cross. Hopefully you guys are like understanding everything. But the 10 crossed above the 50, green crossed above the blue. Probably could have gotten entry around like 0.37, 0.35, and then look at boom all the way over 0.55. So that's probably like close to 100% on that trade. And then right here, the 10 SMA was starting to point down really hard. I'm pretty sure the market was neutral at this point. So 10 SMA pointing down really hard, and the next candle close probably would have showed that. But when the market's neutral, you could play the negative 5-minute crosses. So which that means the 10 crosses back below the 50. When the 10 SMA is pointing down super hard, most likely, and we're like close to the 50 SMA, it could be pointing down a little bit, and we're not like somewhat near it. So wait for it to get close to 50 SMA, and if that 10 SMA is pulling down like really hard, then most likely negative cross will happen, and you could go long, or yeah, in this case you'd go long since these are puts, or just go short if they were calls. All right, man. So like the last thing I kind of want to go over is just like the higher time frame and how to take trades from like the 50 SMA like rejects. So in this case, we literally just took this in the Discord. So see how the 4-hour 50 SMA is pulling straight down? Well, since these are puts on the Friday contracts, you could end up longing, and this netted so many points at the end of the day on Friday. It was like 20 plus points. So really big spike end of the day, and then obviously it just gave that move back pretty much. But we end up closing at the 50 SMA, so we're gonna have to see where we open up on Monday. But I'm still leaning long side. If we do end up crossing on here, we'll have to watch out for the daily resistance on the weeklies again. So yeah, 1 hour, 2 hour, 4 hour, daily, weekly are like the areas like for a higher time frame to watch, and pretty much is all the same thing. Like when playing the rejects, it's pretty simple. So 50 SMA, when it's pointing straight down like this, it's pretty much guaranteed free money, which was the case on Friday. It was like 20 plus free points. And then how do you know when it's like possibly going to break above? Well, when like the 50 SMA is like more flat and it's been tested multiple times, that's when it's likely to break. So always check to see how the 50 SMA is like pointing. If it's flat, more likely to break. If it's pointing down hard, it probably in most cases won't break above. So yeah, it's pretty much how to like take those trades, and that's kind of how I want to finish out the video. But it's just the same case for all the time frames pretty much. The flatter it is, the more likely it'll break. The more times it is like touched, the more likely it is to break. And once again, 4 hour time frame is when the trend like 98% of the time ends. So and that's exactly where we're at right now. I'm pretty like determined that we're close to a bottom in the market. We're gonna end up seeing a bounce in my opinion, but let's see where we're at on Monday and whatnot. But yeah, that's pretty much how I want to close the video. If you have any questions, drop a comment, and then obviously if you have other questions and you don't want to comment, just join the Discord. But yeah, man, hope you guys enjoyed. Longer video, but hopefully you learned a lot. So yeah, I'm out. Peace.